The big story on India tonight, it's about what the RBI has done. The Monetary Policy Committee today has raised the repo rate. They've done it for the sixth straight time. And this in a cycle that was started to fight soaring inflation, and they've gone on and hiked interest rates. The market reaction may have been subdued. The outcome was already priced in for consumers. The biggest takeaway would be the impact on their EMIs, especially on real estate. So how does a repo rate hike impact your home loan now? Here's Kavita, my colleague, putting that in context with this explainer.
All right, so it's a 25 bps rate hike as expected, but what's going to be the impact on your home loan and your auto loan? Let's break this down for you and let's compare it as compared to last year. How much more are you paying for your EMI this year? So here's a scenario for you where there is a home loan you've taken on 50 lakhs and the rate was 6.75. Last year in May 2022, it was 7.15%, the overall rate hike or the overall interest rate that you had to pay on your home loan. But then now after 25 BPS rate hike, 9.25 is the rate that you are paying on your home loan. Let's look at the EMI amount. EMI amount, when your interest rate was around 6.75, your EMI was around 38,000, but then look at the way it's gone up 45%, and after this rate hike of 25 BPS, the approximate amount that you might have to pay on your EMI is 45,793. Now, this is the scenario in home loan, but then what about your vehicle loan? Let's get you the auto loan numbers also. Now, for example, if you've taken an auto loan and a 5 lakh auto loan, and the previous year rate hike was 40 BPS, and this year after 25 BPS, you can see the amount that has gone up. The interest rate from 9% has gone up to 11.1%, and look at the interest rate hike, almost 30.6%, and your interest and your EMI amount right from 15,900 has gone up to 16,393 this year. So definitely this rate hike has an impact on your EMI, on your pocket. But then what also you need to consider is a lot of banks have stopped increasing the tenure. So if at all you were expecting some kind of relief from your bank by increasing or raising the tenure of your entire home loan, that might not be helpful. You have to sit with your bank and figure out a way, or the only option left for you is to raise your EMI amount.
Yes, indeed, there are tough choices to make, but that's about home loans. What exactly did the RBI governor say? What is the policy outlook going ahead? Are we going to have even more interest rate hikes up ahead? This is something that was top of mind for everyone who was keenly watching what the RBI is doing as far as rate hikes are concerned. Listen in to what we got from Shaktikanta Das earlier.
Assuming an average crude oil price Indian basket at $95 per barrel, inflation is projected at 6.5% for the current financial year, that is 2022-23, with Q4 at 5.7%. On the assumption of a normal monsoon, CPI inflation is projected at 5.3% for 2023-24, with Q1 at 5%, Q2 at 5.4%, Q3 at 5.4%, and Q4 at 5.6%. Headline inflation has moderated with negative momentum in November and December. But the stickiness of core or underlying inflation is a matter of concern. We need to see a decisive moderation in inflation. We have to remain unwavering in our commitment to bring down CPI headline inflation. Broad-based credit growth, improving capacity utilization, government's thrust on capital spending and infrastructure should bolster investment activity. According to our surveys, manufacturing, services and infrastructure sector firms are optimistic about the business outlook. On the other hand, protracted geopolitical tensions, tightening global financial conditions, and slowing external demand may continue as downside risks to domestic output. Taking all these factors into consideration, the real GDP growth for 2023-24 is projected at 6.4%. I repeat, the real GDP growth for 2023-24, that's for the next financial year, is projected at 6.4%, with Q1 at 7.8%, Q2 at 6.2%, Q3 at 6%, and Q4 at 5.8%. The risks are evenly balanced.
All right, so that's what we got from the governor when he was speaking about the latest rate hike. And yes, do remember, this is the last rate hike in the current fiscal. What could be the road ahead as far as the Indian economy is concerned? We've got our consulting editor, Maithili Bhusturmat, and this is what she makes of the RBI's decision. Maithili.
The Reserve Bank of India's Monetary Policy Committee announced its decision this morning, and it was largely on expected lines as far as a rate hike was concerned. 25 basis point is a rate hike, though of course here again the House was divided. It was a 4-2 decision. But what was surprising really was as far as the stance was concerned. There was expectation that the stance would shift to neutral, because one could argue that the signals are quite ambiguous at the moment. Growth is slowing down fairly decisively, because one can see that both from the government's estimates of growth for the next fiscal as well as the RBI's own estimate for the next fiscal, which is going to slow down from 7% this year to 6.4%. Given that, there could have been a case for changing the stance to a more neutral stance. However, the MPC, again note, by a 4-2 majority, opted to keep it focused on withdrawal of liquidity. So that is an area where one could have some dissent, some quarrel with the MPC decision, but otherwise the stance, the broad policy was more or less in line with expected lines. Of course, the big question mark remains that if the RBI is going to remain focused on withdrawal of liquidity, what happens to the government's borrowal program? Because remember, the RBI is also the government's debt manager, and this kind of positioning or this kind of position of the monetary policy could put it directly in conflict with its debt management role, because you could see yields spike up sharply, and as Nilesh Shah has said, the government borrowing program would require substantial RBI support. That means that the RBI would have to infuse liquidity, in which case we could have a conflict of sorts. But as of now, the policy decision is more or less on expected lines. We could perhaps see some reversal as far as the stance is concerned in the next policy.
All right, so more clarity perhaps in the next policy decision is what Maithili is pointing towards. But let's just understand the impact of the latest rate hike on repo rates on our EMIs, on home loans as well as auto loans. Let's get that from Aparna Ramachandra, the founder and director of RectifyCredit.com, is joining us on the show, along with G. Pradeepkumar, the CEO of Union AMC. Great to have you both with us this evening. Though I want to begin by asking you, Mr. Pradeepkumar, this was the first MPC meeting after the finance minister presented the budget. It's also perhaps the last rate hike of this fiscal. So while this comes pretty much in line with what we were expecting, cumulatively now, we're looking at interest rates going up by 250 basis points since June last year. How much do you expect EMIs on home loans to rise now? And would you suggest that borrowers shell out extra money to repay their loans or extend the tenure of their loans? What would be better, according to you?
Hi, Vikram. I think, the policy action has been on predicted lines. So the market had already built in quite a bit of this. So nothing has come as a surprise. But from a retail borrower's point of view, my suggestion would be, wherever possible, try to extend the tenure, because there is every possibility that sometime, perhaps later this year or next year, the cycle would reverse and you would have the opportunity to get lower rates. So it's preferable to extend the tenure at this stage. But if your bank doesn't agree, then you have no option but to increase your EMI amount.
Ramachandra, do you agree with what you're hearing from Mr. Pradeepkumar? The higher repo rate that the RBI has now announced is definitely going to impact new home loan borrowers, as well as those who've taken a floating rate loan. What do you suggest that they do now?
Good evening. I think I agree with what Mr. Kumar was mentioning earlier. The best option for the retail borrower is to extend the tenure. But if you are not in a position to extend the tenure, you have only two options. One is you continue to pay for some time and see if there is something that you can manage and build a little larger amount and try and do a prepayment of that loan, so that in the long run the cash flow doesn't get affected on a regular basis, and only hope that this reversing of the trend happens sometime soon in the next fiscal. But I don't see it happening in the first or the second quarter, maybe the third quarter. So you need to be planning for the next at least 8 to 9 months for these kind of increased EMI amounts on your loans. Vikram.
Sure, yeah. And Mr. Pradeepkumar, also from the bank's perspective, because of the series of interest rate hikes that we've had in recent times, these home loan interest rates have already crossed the 9% mark. Now, for banks, when they increase the tenure of some loans, they would cross the working age of 60 years for many borrowers, which becomes a tricky scenario for banks. So when tenure of loans rises so much and so steeply, do you see more banks increasing the installment amounts rather than the tenure by default? And if that happens, what should borrowers do?
Vikram, you're right, because banks would face this dilemma, which is why I mentioned that the borrowers should try to increase the tenure where possible. There could be situations where the banks would not be willing to extend the tenure for reasons that you just mentioned. So in that case, borrowers have only the option of either increasing the EMI amount or prepaying. From the bank's point of view, I don't think they will take too much of a risk with the loans.
Yes, indeed. It's going to have an impact overall. The acquisition cost of real estate as well. Now that would go up. Aparna Ramachandra, I'm sure you'd agree with that. What kind of impact do you see playing out on the overall housing demand? Do you think we've peaked with interest rates? And if so, new home loan borrowers, should they wait before they take a home loan? What's your understanding?
This is exactly what I was thinking when I started. I logged into this interview, that I would like to state that people who have still not borrowed, who are sitting on the fence, not decided whether they should opt for that home loan or not, do your math once again. Go back to the drawing board and see whether you are able to sustain, because we are currently in a very choppy scenario. And this home loan is a very long-term commitment compared to the auto loan that we just saw. They are typically 3 years, 5 years. But a home loan, like we all know, is at least 20-25-year commitment, where these cycles are going to be there. So if only you are sure that you need that asset and you are going to be able to sustain repayment, go for that home loan. If you feel that it is too much of a commitment and you are not ready yet, it is okay if you don't have a home loan. It is okay to stay in a rental place, but at least don't have these negative investments. One is from the industry that I come from. If you start to default on your home loan EMIs, your credit profile takes a bigger beating, and going forward, the opportunity to take any kind of new loans, you really hit the roadblock. So please do that sincere homework before you actually say yes to that home loan, because there is no need that everybody needs to have a home and have a home loan. Vikram.
Absolutely, that's sage advice, Aparna Ramachandra. And of course, as far as investments go, there are several avenues right now. So perhaps this may not be the best route to take if it's purely an investment. And perhaps with a turning interest rate cycle, it makes more sense to wait it out. And turning to auto loans as well, Mr. Pradeepkumar, I was looking at a report that suggested that we are looking now at more delinquencies. Perhaps they are rising. If so, what do you suggest to those who are lagging in their auto loan payments with the squeezed household budgets that we've had in these inflationary times? What do you suggest we do?
Well, Vikram, defaulting on a loan is not really an option. As Aparna mentioned, it has serious long-term repercussions. So I would really advise anybody who is having a loan, must make all efforts to make the payments. Wherever possible, do prepayment, and if necessary, cut down expenses somewhere else, or perhaps dip into some of the emergency funds if you have really no other option. But don't even think about defaulting on a loan. I think it should be absolutely the last possibility. And coming back to the home loan issue, I would like to add that one should consider purchasing a house in this kind of situation only if you really need to live in the house or utilize the house. Looking at real estate as an investment right now may not be the best thing to do.
Both of you seem to be in sync with this. Meanwhile, the RBI has proposed to do away with the levy of penal interest on loan defaults by regulated entities and they are planning to replace it with penal charges. Though this is, of course, still in the pipeline, Aparna Ramachandra. Can you tell us how this could be beneficial going ahead to home loan borrowers, auto loan borrowers in the future?
See, currently we have, late payment charges, there are penal charges, and then there is, delayed payment charges. So there are multiple heads under which the penalty, the borrower has to pay extra when he has defaulted on a particular EMI. So what RBI is doing is a very welcome move, because it will genuinely help borrowers who, actually gotten into serious trouble. But having said that, that should not be your reason for defaulting, saying that I can anyway pay the charge and pay the EMI the next month. So don't make this as a habit. A one-off is all right, but this should not be a pattern. Number one. Number two, over a period, when we are, especially when we are looking at a home loan, if on a during a 20-year tenure, there are multiple instances like this. A, it is going to affect and reflect on your credit profile. B, you are going to end up paying much more than what you are anyways paying. So don't get into this, but genuine borrowers for, whatever XYZ reasons, 1 month, 2 months, you are not able to go pay. It is equally important that you go and put this in writing to your lender, saying that these are my reasons, which is why I request for this kind of a support from you, and then opt for these charges that are there. And I'm sure they are going to be much lesser than those multiple charges that the lenders were charging currently. Vikram.
All right. Aparna Ramachandra and Mr. Pradeepkumar, thanks very much for joining us with your perspective on these higher EMIs that we'll have to shell out now that the cumulative impact of all the interest rate hikes that we've seen over the last fiscal are going to add up to our budgets. And of course, it's going to be a strain, but we'll have to find ways to deal with it. But thanks very much for putting it in perspective for our viewers. Great having you with us. Meanwhile, many